Welcome. This is the Trade Tribe, Season 1, Episode 8. My name is Taufik Suleiman, I'm a student investor, as by no means am I an expert, but every week I'm looking to learn and bring my tribe along. The Trade Tribe is a trading community and show where we learn to trade, share strategies, and contribute to making the tribe wealthier. This show is our take on how we analyze the markets, what we think is going to happen, and how we make plays on that, as well as share our learnings along the journey. Between our trading group chat and our weekly recorded calls, we want to see every young adult, a part of our tribe, thrive. So make sure to add us on Instagram, Twitter, YouTube, and any podcast platform at TheTradeTribe. Let's go. As usual, we go through a bunch of different things in the week, starting with the intro, moving on to the guests and check-ins. Meme of the week, started off light, lesson of the week, share some knowledge, gets you filled up with the information you need to be successful. Week in review, talk about what happened, why did it happen, what could we have done, what are the results, as well as talk about week ahead. What are we seeing, what are we predicting, how do we make money off of that? Members picks, so specific strategies and ideas that people have, then divulge into off topic and exit out. And this week we have myself, Hero, and Javier on the call. A couple people might be popping in and out in the chat. So the question this week is, how are your week going? As well as, if you had your own talk show, who would your first guest be? I'll start out with Hero.
My week's going pretty good. Getting some major data back. Working on my first sponsorship with a company, yeah. So I'm winning there. And since I already own my own talk show, my first guest, if I had to pick one, it would probably be Muhammad Ali. If we're not worried about dead or alive, just because he's such a great interview, and he's always dropping dimes. Some of his best dimes were dropped off the cuff in the middle of an interview, and I've always appreciated Muhammad Ali for that.
True, that's a great one. How about you?
Yeah, I'll probably, if I had to talk shows, I'll probably invite LeBron, just because he's a good athlete, and off the court seems like he's setting himself up well for future endeavors. He wants to own an NBA team soon. He has his own companies outside of basketball, more an athlete. So it just seems like he's a good businessman, and he's just trying to incorporate both while still playing the sport he loves. So I'll say LeBron probably.
Facts. Okay, that's a good one. We got the king in there. For me, my week's been going well. Just interesting balancing between work, trading, as well as the AfroTech conference that took place this week. If y'all don't know what the AfroTech conference is, that is damn near the biggest Black tech conference for people interested in tech, entrepreneurship, startups, VC, things like that. It's a super great experience. If anything, it helped motivate me to keep working on things like this, the Trade Tribe, and just pursuing our own channels of wealth. So it's been interesting, but definitely a struggle balancing all three of those this week. But it's been great overall. For me, if I had to own my own talk show, technically my first guest would, if it could be anyone, would probably Robert Smith. I'll just be interested to understand how he built his company and his Vista equities and things like that, especially being someone for me that came from an engineering background. And it would just be interesting to see, okay, how did he go from that to generating wealth and investments and things like that. And it doesn't hurt to talk to someone that's a billionaire. Anything he says is worth at least $1 million.
I guess. Doesn't he also own that airline?
Possibly. I'm actually not sure all the stuff he owns.
He owns too much shit. That's my point.
Exactly.
I'm a hater. Never mind.
Hopefully one day we can get to a point where we invite him on the call. On to the meme of the week. The meme of this week, I think, is very funny because you see someone here taking credit for profits and saying this is the result of my actions. But then on the flip side, when he is down and taking losses, it's always this is the result of many external factors, including myself.
Hey, I'm a genius when I'm right. Hey, that AMC call out I had last week was on the money. That's all me.
I'm telling you, I know for a fact you got an inside man at AMC.
That was crazy. Did you get out of it?
Huh?
Did you get out of it, or are you still in
112%? Locked my profits and left.
Well, that is good.
And-
We gonna see. We gotta see where it is now and keep track of it after the fact. But I know for a fact you're the inside man. And it's not the result of your actions.
Literally everything you said like came to fruition on Monday. I was like, bro, how they do that?
I'm not. People really be out here testing me. Taufik has had me as his brother for long enough to know, like, when I say some shit, it's not because I'm not be out of failure or fail safe. I've already experienced it. The fact is, like, AMC was just too low. It was any good news is gonna boost their numbers. Period.
Facts.
There's not enough volume for it to matter. So it can go as low as it wants, but there's over 64% of people that hold the stock have been holding it for up to 8 months. So it's just poor volatility. And
Wait,
poor volatility.
How long people have been holding it for?
So like Robinhood has a feature that also tells you what percentage of people are possibly holding on to the stock. So just from a numbers perspective, you see the volatility is low, meaning that there's nothing new in there, and because they don't have any new stocks to share. So if you own a portion that you're being trading with, any small movement, whether from a big dog or from a little group of people, will cause that to flux. So if there's a bunch of people who are winning in the market and they own it, they're going to buy more onto it, period. It went from $2.40 to $6. I was running. That night, on that call, I bought 13 shares and had 10 already on deck. And I was just like, screw it.
That's real. Sometimes you just gotta take that leap and believe in valuation.
And you know, I'm a dividend king, and their dividends is up to $15 because they're desperate. So I'll take that too.
Now, if that trade went down, what would you been saying? It would have been external factors.
Hey, you know what? It's already a loss. Okay, for $50, I would put, if you're not willing to lose $50 in the stock market, you don't belong here.
Honestly,
that's an easy trade for me. $50 off, I'm walking away with $233.
Hey,
yeah, I would have took that $50 L, and I would have blamed somebody for it.
Facts. Always reliable to trust on blame Trump. But don't. Any other thoughts? Meme of the week? Anything funny else that y'all saw this week? Dope. That is our meme of the week. This week, I thought it would be interesting to do something new. And over the past 2 episodes, I've been talking about, I'm practicing and trying to learn more about unusual options activity and scanners and things like that. And I talked about scanners in one of our previous episodes, so check that out. But this week, I wanted to just give you guys just a summary of like what it is that I've learned so far from my journey in understanding unusual options activity. But as context, there's always people asking questions, especially beginners. They're saying, okay, what strategies do you use for options trading, or how does options work? I've explained how options work, so check a previous episode. Now to answer the second question, what are strategies that you use? One of the strategies that I've been using has not been working recently, so I've been trying to learn new ones. One of them that I've heard a lot about is this thing called unusual options activity. And basically what that is pretty much paying attention to when people are buying or selling an option more so than their usual. So different platforms provide a metric or number that kind of measures, okay, what is the average volume or amount this underlying asset is being traded or not. So for stocks, that is the volume. For options, there's something a little bit distinct called open interest, and that pretty much tracks how many open contracts are there for this specific option. And basically, that's a way you can cross-check that against the average and its current value. And using that as a metric, okay, something else is going on. Someone knows something that they shouldn't know, maybe some insider trading and things like that. And that's a great strategy. But before I jump straight into the strategy itself, I want to give you guys a great format I think is really dope that we should implement ourselves for any form of trading. And this kind of applies to all forms of trading, but we're going to be specific to unusual options activity today. And typically the format is you formulate an investment objective. So, okay, are you looking to make this amount of money off this call? Are you betting that, okay, you want to invest or have some stake in rising oil prices or things like that? You got to decide, okay, what is it that you're really going for? What is the objective? And that could be anything from, it can be anything from saying, hey, I want to hedge this position, or I want to diversify my portfolio, or I want to focus heavily on tech stock or cannabis stock since that's going up. That's pretty much your objective. Then from there, you structure out the rest of your strategy. Specifically for options or unusual options activities, there's typically 3 investment objectives. And that is either to 1, hedge a position, meaning if I have 100 shares of Microsoft and I believe there's a chance that it might go down in the near future, I'll buy a short-term option call or options put on Microsoft because I believe it's going to go down and I don't want to let go of my shares, maybe possibly for dividend reasons or things like that, or not wanting to lose or miss out. What I'll do is I'll keep my 100 shares of Microsoft, but buy a put option that requires less capital but has higher return on it. And basically what that would do is allow me to offset the loss. Maybe it's a 5% loss on the stocks itself, and it'll probably make me more as it's going down than what my stocks is going down. And I guess keep the stocks, sell that put, and be able to just hedge off the loss. And then it looks like I didn't lose any money at all. If anything, I have more money to play around with. A lot of people that do that are mainly institutions that cannot easily let go of a huge amount of shares. And basically they use that to kind of keep their results. Okay, we didn't take a huge loss this quarter. Another main objective is speculation. So this is for more so aggressive investors, people like myself who don't have huge amount of capital, but I'm looking to grow that as quick as possible. And basically the goal is here is to, if you see something happening, you notice it's like, okay, I believe very strongly that this is going to happen. Like maybe Microsoft is releasing the Xbox. So I think, okay, everyone's going to go crazy and buy a lot of shares of Microsoft, or that's going to increase their revenue. I would speculate that the Microsoft stock is going to go up, and then I'll buy an options call. So that's another way of having an investment objective. And lastly, premium selling. This is something that I'm just learning about, and I did not know much about it, but it kind of makes sense when you dive deeper into it. And basically, this basically says that, hey, as you're holding a stock, so for those people that are long-term investors, they have maybe 100 shares of a stock like T-Mobile, and for some reason, it doesn't move around a lot. What you can do to build income on your shares in those stocks is you can write a contract and sell it to someone else saying, hey, if this happens, you get this, you can buy this shares, but you know for on your side that nothing's gonna happen. So basically just getting income from selling and taking the premium on that option that you wrote and sold to someone else while your stock is doing nothing. So basically you're getting money from your stock doing nothing. And those are just some of the objectives. Then from there, depending on what your objective is, you kind of set a risk reward payoff. So basically saying, okay, am I willing to spend this much for this amount of gain? And with options, if you buy an uncovered option, a lot of the time, those are infinite reward, where the risk is pretty much just the amount you put in. So basically, as good risk management, you don't want to put your whole account in, you just want to put something that's, okay, I don't mind losing this if this goes wrong, but I'm confident in the fact that this is something that will most likely go right. So I'm going to put my investment in, which is a premium. For me, I try to go for nothing more than 15% of my account. And I size it based on how sure I am on those calls. The next is actually going to do the due diligence. Checking, okay, what events are coming up. And events could be, do your due diligence by checking what the events coming up regarding that stock or asset is, as well as checking the volatility. But first, what are some of the events that could happen? It could be anything from earnings reports, dividend announcements, product launches. It could be, and those are the ones that you can expect and are scheduled on calendars, and you can get the announcements early. Or it could be something that a lot of people are not aware of. This is more so called unexpected catalysts, stuff like a CEO making an announcement, just like with Pfizer this week. They announced the results of their vaccine performance on studies and things like that. And that was unexpected, but made a lot of huge effects on the market this week. And we'll talk more about that. It could be something such as institutions giving an analyst upgrade or downgrade. It could also be an investor a major investor taking a position on a stock or getting out of a position, or a black swan event like COVID, stuff that you cannot expect. And these really move the stock, and these are the things that you kind of should factor in while coming up with your strategy. And finally, those events will basically determine the volatility or imply volatility of these stocks. So what you want to do with, especially with unusual options activity, you want to check the volatility. Okay, what is the percentage implied in volatility from different moves? And you normally show that on different platforms as, okay, this is expected because of the current market conditions, and it changes every day. And you also want to cross-check that volatility as well with the change in volume of the stock or the option. So you want to see, okay, if the average daily volume for this stock is really 1 million, and all of a sudden it's trading 5 times that, 11 times that, 11 million, obviously something is going on. Or someone is not aware. Someone's aware of something that is going on that a lot of people don't know. And typically those will be institutions. So you want to check and see, okay, what is that is. But a second thing also is of checking the volatility is to know, okay, am I coming in too early or too late? Typically, you want to get in when the volatility is low and ride it as the volatility goes high, because as volatility increases, the price of the option increases as well. And that's how you make your money off options. You want to buy in a lower volatility and sell at a higher volatility. And typically, if the volatility is above a certain threshold, typically you don't want to get in, because at that point, the price is extremely high. There's too much going on. And if the volatility falls for some reason, you're losing money no matter what the stock does. And that's called the volatility crush, the IB crush that a lot of people talk about, and what a lot of options traders lose a lot of money on because of. But that's just a high level overview of that. And finally, just establish options perimeters. And that should be easy once you've done all these other 5 steps. So, okay, if you think the stock is going to go up to this amount based off this news, obviously you want to buy one that's either in the money or out the money of around that price, and not go way too far off from that point. You want to set the expiration date. So if the earnings is next week or 2 weeks from now, you got to decide, okay, for yourself, based off your strategy, are you selling before the earnings? So you know, okay, the expiration date needs to be before the earnings, or you think it's going to be a post delayed reaction? Also, setting your expiration date after the fact. And obviously the last one being pricing. Obviously you want to go for the cheapest price and not the highest price. And you do what works to your account. But that's pretty much a just general overview of any trading strategy, but more so it's tailored to unusual options activity. And I will talk about a couple more points. But before I jump into that, any questions regarding that so far?
Yeah, I have a question. On apps, is there any way you could tell when the volatility goes up and down, or you have to check on your own? Is there any signals?
Basically tracking it, yeah. You got to manually track it, or going back to last week's episode, talking about scanners and lists. When you're looking at, well, that wasn't last week's episode. You can use scanners that track, okay, did the volatility go up on this stock specifically? Yeah. So it tracks it for you. But basically, yeah, you have to check those. There's no way to say, okay, the volatility went up 10% today. You
have to create a scanner for it. It's super important. But when every time you set up an option on Robinhood, it gives you a snapshot of the current volatility. Yeah. So you can use that snapshot, but volatility literally can go from 0 to 100 in a millisecond. Yep. But it will give you that snapshot for a brief second. So if you use an average of the snapshot of opening and close, you can then use that as your general average. But ultimately, a scanner is what you're going to need to have a definitive by the minute type answer.
All right. Yeah, sounds good.
Yep. Just a couple other points. I'm still wrapping my head around unusual options activity and things like that. But the biggest thing that I've seen is to really validate and check this current day volume across the open interest. There's a difference between the volume and the open interest. The open interest is the amount of open contracts, while the volume is the amount that have been traded overall. So it's a little bit different, but you can use that to compare those. I'm still getting the hang of it and kind of pay attention to that. So that's something I am still practicing. Another thing is determining the magnitude of the move based off of the open interest calls and contracts. So basically what they're saying is, a good example is if you see for some reason there's 5 times more open interest than normal on a strike call for $210 of a stock, but the price is at 180, that you can deduct from that okay, maybe someone is betting by this expiration date of that contract that the stock is going to hit up $210, and that is what, $30 over 180, that's about 1/6, roughly 15% move. That's basically what they're saying. Hey, there's going to be a 15% move on this stock by this date. And that's probably an institution backing it, probably from insider information. So you want to keep track of those. So that's basically saying, okay, by this date, this stock is going 210. What are the plays that I can make to do that? You can probably mimic that, or maybe do something different based off that. But basically, you're taking this information, although not guaranteed, and determining what is the range that this stock is going to do. And that helps you reduce and, organize your strategy better. That is something I did not know about prior to this week, and I might even start practicing that myself, actually thinking, okay, if this person is putting this much weight into this, that means that is, how does that affect where I think the stock's going? I can know when to enter or exit based off that. Also, discovering the direction of the trade. I also am figuring out how to do this, because basically it can apply two things, because either so the person might be hedging or they might be speculating. So using different hints or indicators to kind of track, okay, this means this is going to be this bullish or move on this, or is it going to be bearish? You can use that, use the options activity to determine the direction of where the price is going to go and where you should kind of be positioning yourself on that trade. There are ways to track this using the options chain, which is basically where you go to see the different strike prices, expiration dates, and things like that. So I am getting hang of that. But basically, one of the things that I've heard was that when you're looking at the options activity or the options chain, you can tell when it's being bullish or bearish based off how spread out the unusual open interest numbers are. So if it's on one specific thing, I believe that means that is bullish and it's been a bullish call on that. But if it's spread out, that means they're trying to get out of their position and might be shifting that into different things. But I will confirm that the more as I'm learning this concept or strategy as I go. Again, analyzing the options chain for opportunities. One thing that I was probably incorporating into my schedule is just looking through different stocks and seeing, okay, are there any unusual activity going on here, until I find a way for automated way for it to kind of alert me of these options activity. And yeah, basically using those two things are the biggest things. But a lot of things that happen is you can tell based off the number of open interest, whether it's uncovered position or if it's a straddle, which is betting on the volatility. That is a different strategy that you can use to kind of make money, instead of not directly from the price itself, but from the increasing volatility of these assets. But as we're learning that, we'll kind of use that as different ways to kind of make money off these option plays. And I did see a good example, if that's something y'all interested in going through. Basically, it kind of walks through how you frame a strategy. So for someone like us, or myself, where I'm an aggressive trader, and I believe the prospects of a company like Bank of America is bullish, and I have $1,000 I want to use for options trading out of everything I go on. My objective is to buy speculative calls on Bank of America, which is trading at $30. This is speculative. This is just an example. And I think, okay, I want to make money off this. I think Bank of America is going to go up. That's my objective. Now it's for me to determine what my risk or reward is. If I don't mind losing $1,000, if I'm only looking to lose 500 out of that 1,000, that kind of changes what kind of option I'm going to buy on this stock itself. And it helps me decide, okay, am I looking to lose this amount? How much am I going to win off this? But the next step would be to check the implied volatility. The implied volatility for this call might be something where around $17. If the stock is at $30, the next price above that would be $31 or $32. So I need to look at those implied volatility numbers on that for 1 month calls as well as 4 month calls, because you want to see, okay, where is the movement going to happen between? And lastly, checking the market volatility as well. You should make sure that you're in a good space where what's it called? The market is in a condition that will support your strategy or your objective. And lastly, checking as well the events that are going on. So here they checked and said, hey, the company does not have any earnings since they just had theirs, so there's not much from there. And just think of what are the other events that can happen. Is there another company that's doing earnings related to this stock? Is there a competitor releasing or IPOing around this time? Or try to think of all the unexpected things, such as COVID. What happens if a vaccine just pops up? What if there's no vaccine and things like that? You got to factor those in to when you're making a decision on specific plays. But you can only do so much, since a lot of those are unexpected, but the most expected ones are the earnings, product launches, and things like that, things that are already announced. And lastly, what strategy works best for these conditions? Once you've looked at the conditions, you know what your objective is. Is it the smartest thing for me to buy an options call or options put? If I'm going with the call, does it make sense for me to do an out the money call or in the money call? For this, I'm confident that this is going to go up. So I'll most likely go with out the money call for multiple reasons. One, because they're cheaper. They give me more time to kind of get out the trade if it doesn't go according to plan. And what's it called? I can use that to kind of increase my gains off what I'm believing confidently in. If not, I can use something different and come up with my own pros and cons. Then you kind of know what strategy to use. Lastly, just choosing a specific parameter. So what specific strike price, what specific expiration date, and what specific price am I comfortable getting in on. And basically using that as a way to kind of make that. And that's basically how you come up with an options trade. In this case, you don't see much about unusual options activity. But if I do notice something different with the volatility or the open interest in volume, that will be a good indicator on, okay, changing what the strategy is or changing what my parameters would be for that trade. And yeah, that is the lesson of the week, unless someone else has any questions regarding this. Dope.
I think that's good.
Dope. And this is something that I am working on. I'm working to get better on, but I'm going to be using this framework for a lot of the calls that I'll be using or things I do. And yeah, just as a heads up, for the next week, we will go in over the chapter 3 of the book we've been reading for the past 2 episodes, called Calculated Risk by Kevin's Trades. Again, if you are interested in getting this book, we do have a discount code, TradeTribe. You get 15% off the already 50% discount on it. This is closing soon, so make sure to go check that out. It's $100 retail, but it's selling at $50, and you get another percentage off if you use our discount code. So definitely check that out. Get $64 off knowledge of something that will make you millions or thousands in the future. And use that as a way to get into the options trading, using technical analysis, things like that.
If you're joining this group, and just to say this, if you're joining this group and you haven't taken the time to read a book, like how hungry are you for this? Like, yeah. You can come here and probably score big on one of our call outs or something like our predictions, but how great is it to already have that knowledge up here so you can do it yourself? It's better to be the person making the call out than receiving the call outs. That's all I'm saying.
Exactly. That's a great point. We got to keep growing and not rely on people that you have given you gains in the past. You want to be a self-reliant trader and investor. But yeah, check out that discount opportunity and be ready for the next week when we go into chapter 3, the last chapter, and possibly moving on to it. And if you have any suggestions or books you're interested in, courses, definitely recommend that to us and we will give it a read. All right, for the part that people care about, this crazy week that happened, what do y'all think? I feel like there's so much stuff that went on ever since the elections was coming around. Things have just been all over the place. But it's been a crazy week.
Trump finally conceded. So he conceded in a tweet, but for what it's worth, the gains of the market were pretty good for me. I think you can't sit here and be like distraught anymore. Like, if you're waiting for the market to get better, this is the start of the market getting better.
This is the point. Yep. I feel like the market went from being bearish to bullish somewhere between this summer, between April and June. But for now, we're really getting to a territory where it's comfortable for you to start getting back into the stock market. But of course, carefully, because there's still stuff going on and a lot of stuff that can affect the market. Before I continue, I want to welcome Lukman. Lukman's on the call.
Oh, we got a celebrity in the house.
Man, my bad, man. I'm back though. Sorry, I've been out of the loop. But
that you wanted to hear about options trading.
Oh, exactly. I got to get back in the swing, but yeah, about to close on my first property / home. So in a couple of weeks, so I kind of got that finalized. So I'm good to go.
Dope. As long as you're making moves in a different market, that's all that we love to see. But again, going back to the weekend review, I believe the biggest thing that happened this week was Pfizer. I am both angry and happy with Pfizer, but I feel like there's a lot of stuff that we got to dissect there. But for those that were hiding under a rock, basically Pfizer released trial news saying that they have got results from their study saying that their vaccine is 90% effective against the COVID virus, and it beats all expectations of what people think could be the end of the COVID period or pandemics coming soon. So it's interesting because a lot of people greatly reacted. The whole market shifted. People were moving in and out of industries, moving their stocks and portfolios around. tech basically tanked. Work from home stocks basically tanked. All these other stocks that pretty much the inverse of it just skyrocketed, from airlines to movie theaters to energy to infrastructure. All kinds of things went up. The gold even tanked as well too. So I think this news was something that everyone was waiting for. No one thought it would come this soon. So it was out of the blue and unexpected. Going back to the point we're talking about, those unexpected announcements could move the stock that you're looking at a lot. And this is a perfect example of that. Because just after that, I think a lot of those work from home stocks dropped in the 10s to 20 percentages. Other stocks were skyrocketing. I think energy itself has been up 17%. Tech dropped about, I think, 17%. And it is just crazy. But something that a lot of people are not talking about was the same day that announcement came out, the CEO sold 60% of his stock in the company.
That's interesting.
Okay. So that is interesting. A lot of people are favoring saying, hey, it was already scheduled, but I don't think it was scheduled. The announcement wasn't scheduled. The sell-off might have been scheduled, but the announcement had to come off to help boost that price up so he can get as much money out for his stocks.
I mean, the two reasons I could think of, well, there's one in particular, but he's now going to go become an ambassador, like an ambassador salesman. Like he wants to be the middleman of every deal of this vaccine. He's going to go be a publicist, and by our laws and regulations he can't do that as a middleman. So Pfizer's owned out in Germany, so like Germany has very strict like third-party rules, and that's probably a reason why as a CEO he's gotten them to X point. So for him, he's like, all right, I'm gonna sell off and I'm gonna go be a middleman and be a liaison, and that way he gets 15% of every finder's fee. So like if you have a $500 million deal, that's 15% off top going to him. He can live off of that.
Facts. It's like perfect timing because with everything going on, everyone with cases spiking, this is the perfect time for him to go do that.
Yeah.
I think it's too convenient of timing, in my opinion.
No, definitely.
But what do you think is going to happen, or how is this going to play out over the next week? We've already seen how it affects the market this week. The market is up 2.2% based off this news. So what will that mean going ahead?
Yeah, I definitely think people are going to have a little more positive outlook with stuff for sure. So, I mean, we were even talking from an entertainment and sports side of like, I mean, this vaccine could, generate this much revenue for the Super Bowl and certain things like that coming down the line if it kind of progresses at the speed that it's kind of going right now. So I thought that was pretty interesting.
Facts. Do you think that's going to encourage more people to like take the vaccine with like things like the sports coming back, things like that coming back, or if that's enough of a incentive for people to buy into stocks or do that?
Ticketmaster.
I think it eliminates the fear a little bit. I just think the fear factor comes down, and then as a result, people will go to sporting events, go to the movie theater, go to concerts. You know what I mean? Just because it's like, okay, there's a vaccine, I don't have to take it, but I just think the fear factor kind of helps people let their guards down a little bit.
Ticketmaster and Live Nation have already started dubbing a contract where they're going to make it a requirement for you to even be able to buy tickets. You have to upload your vaccine certification card. This is something that they're thinking about doing because this is the only way they can guarantee people are safe at their event. So you won't even be able to buy tickets to these events until you've uploaded your card, because a lot of people are saying 75% of the country says right now they wouldn't take a vaccine if it was available today. That's staggering right there. But when you can't go to Walmart or Costco's or anywhere you want to go when the world is open up because you refuse to take a vaccine, it's not necessarily about fear at this point, is you can't live here anymore. So it becomes a necessity. A lot of people are worried about governments forcing us to take vaccines. You're going to be forced by social norms to have to take it.
Yeah, and then just going off of that, I know that I was reading into it, like a lot of NBA teams don't want to go back in the bubble, so it's important for them to get the vaccine and everything. I heard the Golden State Warriors, they're going to try to have 50% of the crowd in there. That's going to be crazy, but yeah, you've seen that Pfizer's making moves to like finally get the first vaccine. That's great news for the U.S. and the world in general.
Yeah, I don't want to rain on the parade, but I'm not a big fan of companies announcing their own results. If this was a result put out by Stanford or John Hopkins or the WHO or the CDC, anybody other than yourself, that's the equivalent of me raising my hand and saying, "Hey, mom and dad, I got straight A's. No need to go to this parent teacher conference." Like, that's just how it made me feel. But if it's legit, if they're being ethical about it, then this is amazing. This puts us on track for before the summer to get back to normal.
Agree. Definitely agree. I think this is interesting because you really can't tell, like, unless they release more information about this, or is this valid? Is this really going to move forward? Because they might just be over exaggerating, but we never know. So we just got to wait to see how it plays out. But let's see what else happened. Reason why I was a little bit mad at this, it was just the timing of it. If they had waited maybe a couple of days, I would have not taken an L on my Peloton stock options call. Actually, sorry. I had an options call on both Piton and Jumia, but Jumia had released not underwhelming numbers in their earnings, and Peloton was doing well. I was up like 10-20% on the call until they made the announcement. Pfizer made the announcement. Everyone was selling Peloton, everyone was selling Zoom, everyone was selling all kinds of stocks. But I did use that as entry points to get back in at a very low price. So I think it can go up, especially when Beyonce announced her partnership with the bike company and providing deals and sponsorship for HBCUs to use and get access to the services or the equipment. So I am still positive and bullish on Piton, but it just definitely tanked my call on them. So that sucked, but we live and we learn. Other things that happened really was the what's it called? The follow-up or the aftermath of a lot of the propositions that are put inside some of the ballots, such as legalization of weed, legalization of sports betting, as well as Prop 22, which is basically the proposition that states that companies like Lyft and Uber should consider their drivers as full-time employees. With weed, a lot of states basically voted that they should legalize weed in those states. So that opens the gates for a lot of the cannabis stocks like Aurora, Grow, and a lot of different ones, because now they have more markets to enter and less regulation. Because I believe it's about 25 states that now have weed legalized after this elections period. And that could be a whole game changer. It could really set the tone of where these weed companies go. I did buy into a couple, I think 2 different weed companies, such as Aurora Cannabis, and there was another one I was looking at. But my stop loss did trigger for Aurora Cannabis. Apparently, they've been having terrible management.
Yeah,
and that's
because if weed is legal, you're not going to buy it legally. You're still going to go to your weed man. Support your small businesses.
I think this is different though. I feel like this applies more so to how they're running the company specifically. But that is another point that I've seen. It was like with weed becoming legal, there's been an increase in the number of people that have been selling or dealing weed outside of certified ways. It'll be interesting to hear y'all points on those though.
Yeah, I'm not really too interested in the legalized weed business. I just think the competition is just too strong. You know what I mean? I just can't see the customer, the typical customers going to this outlet compared to the outlet that they've trusted for years. So yeah. That's kind of the way I look at it. And then the sports betting, I mean, I think that's a part of our culture now, and I think it's only going to continue to grow. They're already trying to find ways to regulate it as far as with, college athletes and stuff like that. So, I mean, I do think that opportunity is huge just because they can tap into a lot of different outlets with sports betting for sure.
Fact. Which are some that stand out to you? I think the 2 that I've heard the most about were DraftKings and gaming.
Yeah, but yeah, it's kind of just DraftKings. You know what I mean? Like, obviously, I can't be involved with that too much in my field, but I do know a lot of people who are involved with the DraftKings. Like, a lot of my friends have DraftKings accounts, and they didn't have them last year, for instance. So I do think it's something that's growing. And just talking to somebody who does it a lot. I mean, you could bet $5 to win $20. So it has it's almost like stocks where it has an opportunity for everyone. You could do fractional shares. You could do, you know, anybody can enter with $1. You know what I mean? So I think that's where the opportunities are going to continue to grow.
Yeah, I think there's a lot of opportunity because right now, I think after this past election, I guess voting, half the country now has legalized sports betting, and that's opening the gates. Now everyone can hop into it. Everyone can buy in. Especially this is one of the biggest pastimes in the country to watch this.
Oh, yeah.
But why not make money off of things that you spend so much time on?
Yeah.
Yeah,
So I
you
think
never
and
be an
it-
athlete. Might as well win money like one.
Right.
Yeah. And if you look at Sports Center and all these news outlets, I mean, everything they talk about, man, they got whole segments dedicated to betting, overs, unders, and all that stuff. So, like, you could tell that the TV and everybody else is kind of getting with the times to provide more information for these people too. So,
Yeah, definitely. And I have a lot of family members that like love betting. So I was talking to them about like the stock market and everything. And they're like, oh, how much have you made like the past like 3 months? Like, oh, like $200, I don't know. And they're like, oh, I can make that in one bet from betting. So they're like, they're not even interested in the stock market. They just
Yeah,
like betting so
yeah.
much. And
Yeah.
they
Yeah.
made so much money from it. That's all they do basically.
Yeah, it's definitely lucrative. I'm not someone that's big on sports, so it's hard for me to kind of give an unbiased opinion on it. But it is working out for a lot of people. And if I'm not good at it, shit, I'm gonna make bank off the companies that are good at getting people that are good at it. If you feel me. So I did buy a couple shares of Penn Gaming and a couple of DraftKings, just to see where that goes. I feel like it's a new industry. Now a lot of people are in it right now, and I want to get ahead of it. It could be a swing, could be a long-term play, but we will see. But those are the top two that I've heard of: DraftKings and Penn. What is the official name for Penn, actually?
Penn National Gaming.
Penn National Gaming, perfect. And those are the top two that I've heard about, and I'll just keep tracking off of. And those are doing well so far. I think I'm, let me see, what am I up on? Penn, I'm up a little bit, like 4 or 5%. So we'll see where that goes. Of course, stop losses in place. And on to the next one. So Prop 22. Prop 22, this was one I called out on a previous episode. And I was like, hey, if this goes through, Uber and Lyft might be a buy-in. And guess what? I did buy in after the results came back. And now I'm up like, what, 17% on a couple shares of Uber. This was a company that I definitely had a strong favoritism for. But I did get out due to the markets crashing, locked in my profits, but now I'm getting back in. Hopefully this is a point where it's finally getting above its IPO levels. So it has potential to go up, especially as they're reducing their losses and trying different things out with Uber Eats and things like that. But the biggest gain being that this solidifies them not having to spend so much on costs for labor and their employees if they have to use contractors versus employees. So that is looking good for their future. A lot of people are favoring Lyft, some people favor Uber. I'm favoring Uber because of their technological expertise. I feel like Uber offers a lot more than just ride sharing. I think that would be a differentiator between Uber and Lyft. But I think that although that may be bad news for some people, I think it's good news for the companies itself. And if we're in it, we might as well. If we're in the stock market, might as well leverage off these plays. So that is something I am planning to hold. Right now, it's at 16%. So that is good news for me, myself. And if depending on what news comes out, it might be a good options play for other people. What do you guys think about Uber and Lyft and this proposition?
Yeah, I mean, I kind of agree with you. I don't think they're going anywhere. I mean, I think the thing that kind of attracts me to Lyft a little bit more is the way that they kind of tie into like the Sky Miles and stuff like that. Like, you know, Uber and Lyft have, you know, the same price, but I can get 40 Sky Miles towards my Delta account if I take Lyft. So that's gonna persuade me to take Lyft over Ubers, and that's gonna, you know, persuade me to invest more into Lyft compared to Uber as well. So just little things like that are something that kind of sway me towards one over the other, but I do think they're here to stay just because I just think, you know, cars are kind of like a thing of the past. It's just because of the popularity of ride sharing and the food aspect though with Uber, I agree. It makes it a lot more appealing having that food element to it, but that's kind of just the way I'm looking at it right now.
I think Lyft, if anything, is just waiting for Uber to perfect it, and then they'll copy it.
Yeah.
It's if you're doing the same exact thing and someone's better than you, just let them be a better than you. You can, if you use your good graces to copy off of them.
Yeah.
Lyft is gonna come out with their own food sharing eventually, and then after that onward. So
I'm not sure because that space already filled a lot of competition. Because even with Uber, another thing to be mindful of Uber is with Uber Eats, one of the biggest competitors is DoorDash, and DoorDash is I think releasing the IPO soon. So if that goes great, Uber will take a small dip because of that. The competition between Uber Eats and DoorDash. So that'll be just something to be mindful of if you're looking at that too. What else? Another thing that's been going on this week, electric vehicles. Electric vehicles is all over the news, all over from China to American. There's this huge comparison between American electric vehicle companies and Chinese electric vehicle companies. And it's interesting seeing how much hype is going behind this train. A lot of the big names going around are NIO, Nikola, Tesla, Fisker. There's two Asian ones. I can't remember one. They were called, I think, LI, and another one that was what is it called? There was another Chinese electric vehicle company that was really making a lot of headlines this week. But everyone is really following this trend of electric vehicle because everyone's starting to see the future of it and how feasible it is in our future, especially with Biden right now winning the election. One of the things that he had included in his policies or things that he's trying to change is to shift the current gas heavy industry to electric vehicle by doing things like installing electric vehicle charging stations all over the country. I think there's a goal to hit, I think 100 or a couple 100 million stations by 2030, which is very ambitious, but it's pretty much saying, hey, by 2030, we're going to need a majority of the country to use electric vehicles. And also in China, with the lockdowns going down, a lot of people are buying cars again, and they're looking mainly at electric vehicles. So the market is just booming in terms of electric vehicles. And I feel like if you throw your money at any electric vehicle company, you are guaranteed some profit. You just be careful on which ones you are looking at, because some of them might not be performing as well, might not be meeting the things that they're saying, such as Nikola with their fraud allegations recently. But I did throw some money to a new American popular one that has been making headlines called Fisker. Their stock ticker symbol is FSR. I bought in last week because I saw great opportunity, heavily underpriced. Tesla now, just as how Tesla skyrocketed, the next company that skyrocketed after Tesla was NIO or Nikola. I think Fisker itself might be the next company after NIO and things like that. And since everyone's hyped over NIO, I think there's going to be a huge dip coming on NIO soon. And FSR is a great play to make while that is going on. So I did buy a couple shares, and right now that is up 25%. So that is working so far. So it's like, might as well ride the wave if you know this is going on.
I got $20 to spare. Why not?
Yep. And right now it's I think it's undervalued, but it might hit NIO levels right now. And at that point, I'll probably sell, lock in my profits, and just see which company is most appealing out of the two. Those bunch of electric vehicle companies. But yeah, what are you guys' thoughts on electric vehicles? Those companies that are going around, the hype, the things like that.
Do they make vehicles that size for me?
I'm pretty sure.
I think you'll be all right, bro.
I think Fisker has an electric vehicle SUV model of the electric vehicles. I think Tesla has theirs. They got theirs. I think it's the Model Y, or which one is it?
Yeah, the Model Y. That's the bigger one, I believe.
All right. I'm listening. I don't know. I've always been into. I drive a Dodge Charger, so like I've always been into the grumble, the engine. Because of my Dodge Charger, I've gotten into cars. Like, because I'm not taking my car to the mechanic every time I need a part repair. Like, I've repaired so many things in my car by myself, and I can see the luxury and joy of having that activity. But there is a part of me that's like, these first brash of electric cars are coming out are gonna need a heavy revamp, because how do you, the car enthusiasts out there who enjoy the rebel of engines and stuff like that, how do you appease them with a 60-mile top hour vehicle? Like, you're gonna have to find a way of like really commandeering that crowd.
That's easy. You can easily distract people. I think something that Tesla is doing, I think is really funny, is while you're in park, you can play Mario Kart with the steering wheel and distract the user. So that would distract me enough to not hear the noise of the grumbling engine. So that's what they're doing. Take my money. Take my money. Give me a Tesla. But I think there's a lot of cool features that you can kind of make up for with these cars coming out. But I do agree with what you said is they still want to appeal to the American feel of it. And I think that's what companies like Fisker is going to do. At least when I saw their advertisement, they're kind of portraying themselves as the American electric vehicle. They have all these different things that people care about. And that's one reason, main reason why I invested in them. And I think that will really appeal to that kind of target group within their industry or those customers. So I do agree with that though. And we'll see how that plays out. Anything else regarding those electric vehicles? I think the one I was talking about before in terms of Chinese company, I don't know that was popular, was LI. I think their stock ticker symbol is LI Auto. I don't know how to pronounce it, it might be Li Auto, but that is another one that has been making a lot of headlines within the Chinese electric vehicle market. And I'll just keep track of that if I was anyone else. Dope.
Yeah, no, I agree. I'm all for the electric just because I think, long term, it's a safer long term play where with 5G's going and just the capabilities. I just think I just from a forward thinking standpoint, I think if the 5G lives up to the hype, I think electronic vehicles is kind of where the place to be.
Yeah, and also another thing is when I talk to my friends and all the time, I'll be like, I ask like, oh, what's your like dream car, or whatever. A lot of people say Tesla, so it has like that Gen Z kind of feeling. Everybody wants a Tesla, very futuristic, like just like going with the movement basically. Yeah, very forward looking.
Yeah, and I think another thing that's attractive about Tesla as well, and a lot of people are getting out of NIOs because Tesla is working on I think plan to release their Model Y, and I think they announced some price cut. So the price of the Model Y will be a lot cheaper, and that will just attract a lot of people to buying that. So that is something that might cause Tesla to start moving up more now. They have been kind of consolidating between the 400 and 420 levels, from what I remember. So that might be a good play. I did buy back 2 shares just in case that does happen of Tesla. You know me, Tesla was my favorite stock, so we'll see how that goes. But lastly, this week, a lot of people have been talking about crypto, with PayPal announcing and introducing more crypto and how much money they're making off cryptocurrency transactions on their platform, to Bitcoin hitting 16,000 this week, although it did drop back below slightly to 15,900. Yeah. I think that might just be a pullback, but Bitcoin is looking really promising. It's starting to, or it actually is back above 16,000 now. I corrected myself. It is $16,021, so it is back above that level.
No one cares. Boo crypto.
I think people are really shifting to it now.
You can now use crypto to give like your favorite streamer money, and it's just like, come on, guys.
Yeah, but I'm also a little bit skeptical about cryptocurrency, Bitcoin especially, but with how much companies like CEOs and companies are putting behind it, I think there's going to be some huge spike sometime soon. I'm just paying my fellows for it. Like with how much PayPal is investing into it, how much Facebook is investing into it, I think there's something that they know that we are not aware of, or they're pretty much convinced at some point that cryptocurrency will be the next wave or will be set standard. And that's why a lot of books are popping up, such as the Bitcoin standard, moving away from the gold standard to the dollar standard, things like that. I think there's a lot of potential. So I did throw $200 to it around when it was around the 15,000 level, and now it's above 16,000. That's what a good.
What's the conversion on that?
Profit so far?
5%. Okay.
Let me calculate that. What is 1 divided by 15? That is about 6%, actually 6.67%. So I am up 6.7%. Threw a couple hundred in there, seeing how it goes. I do believe it is going to make a breakout soon, and I will get out after that because it's forming a similar pattern to the last breakout. If you look at the chart, around the time when Bitcoin was around the 17,000 levels, it skyrocketed to 20,000 and came crashing down, and now it's coming back up to that level. So I think there will be a huge parabolic movement, but it might be a dump, but we'll see how that goes. But we'll see. Any of y'all big on crypto or anything else in regard to that? Or
yeah, I just think it's too risky for me. I'd rather just sit back and let other people get involved. I'm not big on it.
All you Cyberpunk 2077 dudes, you can have it.
Yeah, I'm the same way. I'm not too knowledgeable on it, so I'm staying away from that. Got
it. Any information I learn more about it, I'll definitely share it in the group chats, in the Discord, in the tribe. But I think it's something that people should look at. I'm someone that is stubborn on stuff like that, but slowly, I think this is some kind of being the closing phases of the beginning of crypto, where crypto could take over a lot of stuff. It's making its ways to shows, governments, things like that. So I think there's a lot of potential in it. There was a whole segment on it at the AfroTech session. So I'm pretty much convinced about the possibilities of it, but I'm still a little bit skeptical. That's why I'm playing it small. But besides that, that was pretty much the weekend review. Hamid's not here to talk much about what's going on with Baba and the IPO, but I heard that based off what the Chinese government did in repealing their IPO or certifications to be IPO, about $200 billion has been wiped off in market valuation just from those stocks dropping. And that is crazy to me. The fact of how powerful and how much these companies are worth, it's crazy. This is mind-boggling to me. So I'm just gonna keep playing around with these couple $100 that I have while they play around with their billions, but we'll see where that goes. And yeah, on to the week ahead. This week ahead is not much that I know of, but pretty much there's gonna be a lot of industry movements, more follow-up from the after elections, as people are starting to pay attention to what are the actual things that Biden is trying to implement. You see a lot of movement in those industries, such as the cannabis industries, the energy industries. You see a lot of movement with the tech sector as well. As I believe the ETF for energy companies, I think XLE is up 17% just since the election. So I think that is a result of Biden's plans to shift to more green energy. So stocks like Workhorse, Jinko Solar, all those stocks will probably see a lot of movement for those that are interested in that. You see a lot of people moving out of oil stocks. You see a lot of people moving out of overvalued tech stocks into now revalued or potential value growth stocks that might have been overlooked with everything going on. Also, the weed industry, it did take a huge spike. Stocks like Aurora Cannabis, Canopy Growth, they did spike up a lot, but they are starting to come back due to the hype. But I think they'll still go up overall in the long run based off this win. So it is just be mindful, keep track of how people are moving their money within these industries. Rising COVID cases versus the Pfizer's vaccine. And a couple other IPOs that are coming up are Airbnb, DoorDash, Coursera, Stripe, Canva, Robinhood itself, Airtable, Chime, and UiPath. I don't know the exact dates for these, but some of them this week specifically are NIO. NIO is having one after the close on Tuesday. NVIDIA is having one after the close on Wednesday. And a bunch of a couple ones I hadn't even paid attention to going on next week. What are your thoughts on those?
Yeah, I'm looking at two of them, Walmart and NVIDIA. Walmart just because I don't know, we might head into the next wave of COVID cases, and the one place people do shop at is Walmart. And seeing that there's more cases, that would knock out a lot of Walmart's competitors. So I mean, that's a good opportunity for Walmart. And also, if there is more cases, Walmart Plus is becoming a bigger rival to Amazon. That's another good thing about Walmart. And NVIDIA is seeing that they had a really bad week. Many analysts, like including Deutsche Bank, they rose their price target of NVIDIA. So yeah, I'm looking forward to NVIDIA and Walmart's earnings this week.
You said they're raising their price target on NVIDIA?
Yeah, they wrote, Deutsche Bank rose theirs from $450 to $500.
Interesting. That might be an interesting play. I'll definitely keep track of NVIDIA as well because that may be a good options play. I'm a strong believer in stocks like NVIDIA and AMD, chips being the wave of the future of people buying more devices, needing more devices. They're going to be the ones funding that revolution. But I'm going to see, because with a lot of things, I think there's still an earnings trap going on where a lot of companies take a dip after their earnings. So if I can see an opportunity there, buy in after their earnings, ride the wave back up, that might be a potential play. But I definitely will be looking at that. That is a good point. Any other ones stand out to you, Hero, Lukman?
For me, I think I'm going to be focused. I'm going to be really copacetic this week because I've done a little bit of like triggering out and bottoming out. So now I have my money invested in these dips and I'm waiting on the rebound on them because I've already made my profit on them. If I had to be paying attention to anything, I'm going to stick to my guns. It's always going to be for me the dividends play. So Apple came off. This Fisk one, I'm definitely going to take a look at. Definitely look at that one. But I'm going to stick to my guns. Like I made my dividends off of Apple. I got dividends coming off of First Energy, dividends coming off of Energy Plus, and I got dividends coming off of AMC. So I'm looking at making $44. I average $33 a week. So I've already made my money for the week based off of dividends.
Dope. We love to see it. I'm over here getting my dividends game up. I got my first $30. I got like 30 cents worth of dividends last week. That was something I was really excited about.
Yeah, man. It started off small, but as you keep adding up, one day you're just gonna look down and you're gonna see, damn, I made $50 today off of dividends. All right.
Yeah. You were about to say something, Lukman?
Oh, I was gonna say I'm just buying dips. I'm not really playing any options off of earnings. I just think it's too risky right now. It's just too unpredictable. You know what I mean?
Yeah, because you could have a good thing like the airline had. What airline had a good thing? I think and it was good, and they still were in the red.
Exactly. So like, I think when you get good news off earnings and it's in the red, I just stay far away from that. Just from
Now I'm the same way. I feel like I've been avoiding like making earnings plays specifically, but I've been using it to still keep track of what is going on with stocks. Like, because with the earnings report, they release that's their time to release all their inside information and reveal all their knowledge and results. It's still something to keep track of. That's one of the reasons why I keep it on here. Although a lot of us are shifting away from earnings report, I think it's still information that could be gathered from these earnings reports.
Yeah.
Dope. Anything else, Javier, or?
Another thing, I was gonna say that it was on Tuesday. It was a big drop on the video just because Apple, they announced their chip, and that was supposed to be to like kind of knock out Intel, but the like market's so crazy that people dropped out in the video, even though it wasn't meant to like counter against the video. So yeah, that was another crazy thing. Just the market's so unpredictable, basically.
It really is. And it's crazy because with Apple removed, I think I did see that announcement with their new device, but a lot of people tuned it out because it's as glamorous as they use it. It's kind of focusing on a lot of the features itself. But basically, Apple is making their own chips. They try to reduce the amount of cost and have more flexibility in designing their products. Because big thing about with these chip manufacturers, they kind of set the direction. They, in some way, shape, or form, they set the direction for these product launches with these companies. But if you own your own in-house chip manufacturer, it's easier for you to be more creative or more control of your device's performance. So that is interesting. Because
Apple's trying to take over everything basically. So kudos to them.
Yep, but I do think it'll be really hard for them to do that because when you have such a large company like Apple, it's hard for you to become a specialist in terms of designing chips. And they've had so much experience, AMD, NVIDIA, Intel, has so much expertise on designing chips that they just focus on that, and that's how they make a lot of their money. And they use that as leverage for their partnerships with companies like my own, Microsoft. And I get to see, okay, these are, how much money are they unlocking with just designing their chips this way, and how much expertise does that go into that? But it was interesting to see because I think there's still a lot of potential for NVIDIA and AMD, but we'll see. But yeah, that is pretty much the week ahead. Other things going on next week. There will be some report on what's it called? Housing. I believe the U.S. housing market index is releasing an announcement. Not much that I know of. I don't know if that might affect anything in the real estate market. I don't know if you have any points on that, Lukman. I think you're on mute.
Oh wait, sorry, Tawfiq, I missed you. My mom was talking to me.
No, I'm saying like there's some U.S. housing report going on this week. I was trying to see if that might affect anything in terms of real estate. Since you know more about that.
So the good thing for me is like basically when you lock in your interest rate, you're kind of locked in. So like the interest rates could fluctuate, but once you lock in, you're locked in from my rate of 3 weeks ago. So the news doesn't really affect what's going on. That's why it's kind of important to lock it in when you can. So that really doesn't affect me as much, but I'm curious to see what comes out of it.
Facts. That's a great point. But that is pretty much the week ahead. Y'all have any specific members picks that you guys are looking at this week? For me, I'm just gonna keep on selling these swings. So I did sell off those swings earlier, and I was kind of on a clean slate. But with a lot of the dips and a lot of these stocks, I did buy into a couple of them. Some of them being FSR, Peloton, Palantir, and a couple other ones. I am probably going to start selling those off as the profits come in. I think I have about somewhere between 3% to 25%. A couple of these stocks, Uber being one of them too. So as those are making moves, I would start cutting those off and trimming in and locking in those profits and focusing on about 3 to 4, as well as trying to learn and master this unusual options activity strategy, which I've seen a lot of people make a lot of money off of this strategy. So I'm going to see how well that goes. I gave y'all a glimpse into how it kind of goes in the lesson of the week this week. We'll really see how those go. Hero, any specific things that you're looking at?
Definitely keeping my eye on Sony because they've been getting reports of their systems malfunctioning and a lot of server issues, and this is coming down to a physical cosmetic thing, which if 1 in 100,000 is messed up, that's okay, but if it's 1 in 10,000, then you got a problem. So Sony, I'm keeping my eye on Sony. I have a scanner, keep an eye for a put, for a $3 put, which $3 loss to give me a bonus on a put, and I can ride that out. But other than that, I'm gonna just stick to what I know. Like I said, I already made my weekly money off of dividends, so I'm good this week.
Facts. Javier?
Yeah, this week I'm looking at Peloton just because they're still at like a 1 month low, and I feel like this really like a lot of people are getting into Peloton, so I feel like it's a good company. And also another company is Shopify, just because over summer I did a presentation about them, and that was when it's around $1,000, and it was still kind of, I know it's very expensive, but it's really like the future. It's started to rival stuff like Amazon and like just a lot of big companies online. So I feel like if it has another bad week, I'll probably look into buying it, to be honest. So yeah, just Shopify and Peloton.
Like just as you said, Shopify was recently in like the 1,000s range or 1,100 range, but with that Pfizer news, the stock dropped all the way down to $900. Once I saw that, I was instantly take all my money. I bought 2 shares, and now it's slowly going up. It's now back up to 940. So that's easily $80 profit right there. But I think just as you said, e-commerce is booming. Shopify, Amazon, Etsy. These are the 3 probably top stocks you should be looking at. Also, Jumia, as they're also getting market share in Africa. I think e-commerce is the way. So I definitely, this is a really strong call out right there.
Yeah, over the summer, since I didn't have like that much money, I didn't buy Shopify, but I did buy Baba back in the summer. So I made a couple bucks on that. But now, yeah, I'm thinking about Shopify now, seeing if it's like around 900 mark. If it goes down under 900, I'll definitely consider buying it.
Yep. I'm also as well looking at that too. I used to looking at DuPont and Boeing as well.
No, I didn't do those. I did a little bowling play for like 30 minutes and I got out of it, but that's it.
Oh yeah, that was the first one you made, the first options play.
Yeah, no, this was this past week actually. I was gonna, because I saw some Jim Cramer said something about like he's very bullish about it. It's gonna do great. But after I was in it for literally 30 minutes, it went up like my option trade went up for like $50, so I just got out of it. I was like, okay, I'll take my W on that.
Facts. And for those of you that don't know who Jim Cramer is a very popular investor and talk news host or talk show host. He runs his own show called Mad Money and is a great resource for a lot of beginner investor knowledge. He gives out calls out and plays and is very transparent. I think he's someone that I've kind of included in my podcast rotation. So if that's something that you're interested in, definitely check that out. But how about you, Lukman?
Yeah, I'm kind of looking into like this Black Friday, Cyber Monday deal coming up to see, try to predict some of these things coming. I don't really have any like plays. I'm kind of buying a lot of the dips. I'm curious to see what the market's going to be like this week, and I'm kind of just buying dips. But I'm looking into the Cyber Monday and Black Friday deals to see if people, shop online at least. And so that's kind of what I'm looking at right at this upcoming week.
Definitely. I think that buying the dip strategy is a really old and reliable strategy that works every single time. You see a stock that dips out on overhyped news and you know it's going to go back, buy in, get you some free money, use your money to get more money. It's something that you can almost not go wrong on a lot of the times. I'm doing the same thing with those stocks that dropped this week. I'm buying it. I bought in, looking to sell it off when it gets back to the regular levels. Keep it simple. Don't overcomplicate some strategies. The market is a simple game. You can make it more complicated if you want, but that just adds more levels of stress. But yeah, that is our members picks. We'll see what the other members are talking about this week. We do have 2 new members. I just want to give a shout out to one of them was on here earlier, Rebecca and Kimberly, trying to do our part in making sure that we have more people, more representation in the group, but more perspectives on the market as well. People that one of the goals as Trade Tribe is to grow as a community, but also help make sure that we are all growing and learning together, and change that narrative of not having these discussions, not building wealth through these different avenues. So we will see how that goes. But that is the week ahead. A new segment that Hero suggested is the question of the week. So if you are listening to this on any platform, we have 2 questions for you. Same questions we have for ourselves. If you had your own talk show, who would your first guest be? Make sure to comment on any of our platforms, Apple Podcasts, Spotify, YouTube, Instagram, Twitter, or send us a voice message. That is something you can do on Anchor FM, and we will include it in a future episode. If you want to be shouted out, get your cameo on the podcast, answer these questions, and we got you. Another question is, what stocks are you looking at and why? Now, at this point where stocks are starting to go back to their pre-COVID levels and starting to rally up with positive economy and situation at the end of the year going into next year, a lot of stocks are going to start rallying and the market's going up. We did a poll on the Instagram saying, do you think the market's going to go up or go down? I think about 67% said yes, it's going up, and then 33% said it's going down. So the majority is the market's going up. So which stocks are you going in on and why? And yeah, that is our episode. I appreciate everyone for being on the call. We've done our talk. We've planned out our week. The next thing is just to follow through with it, see where we can make money, and just see how it goes. Meet our goals for the week. So as usual, thanks for listening. Thanks for our guests on the call. This is the Trade Tribe, so make sure you share this with your friends and family, whichever way you're watching or listening to this. And follow us on social media at the Trade Tribe. If you're interested, you can also join our tribe. Just reach out to ask more about joining and becoming a member. Give us any feedback, any questions. We also welcome. Good luck trading, and Tribe out. Dope.
Luke, where's your sister at?